Imagine walking into a buzzing Wall Street cafe overhearing a trader shout, "It's a roller coaster today." Stocks spike, then plunge like a crazed pendulum. You wonder, can anyone really predict this chaos, or are we all just blindly gambling? Burton Malkiel's classic answer: the stock market's a random walk, a wild, unpredictable dance, but don't freak out yet. Turns out there's a method hiding in the madness, and it starts with understanding what you can't control. First, let's crack why Wall Street feels like a casino, and why Malkiel insists it's not your destiny to beat the odds. In 1973, Burton Malkiel shared a shocking story about a Harvard alum who asked a cab driver to pick stocks. The cabbie's fictional picks matched Wall Street pros so closely it rattled the financial world. This anecdote hammered home that professional predictions can be no better than chance. Picture a drunk guy weaving home from the bar. He stumbles left, then right with no pattern. Malkiel uses this random walk analogy to show the market's price moves aren't orderly. They're a jumble of news, hopes, fears, and luck. Trying to spot a pattern is like predicting the drunk's next step, pure guesswork. Most investors think skill can beat randomness, chasing hot tips or timing buys. But Malkiel reveals this game often traps you in high fees and poor timing. The more you chase the market, the more you risk losing to it, like a hurricane you can't outsail, only brace for. If the market's a wild beast you can't tame, what do you fight it with? Malkiel bets on a quiet but powerful hero: index funds. Meet Jack Bogle, who in the 1970s flipped Wall Street's script by inventing the index fund, letting everyday investors buy a tiny slice of every major company. Instead of gambling on winners, Bogle said, just own the whole market and ride its growth steadily. Think of an index fund like a big salad bowl. Each ingredient is a company stock. When one leaf wilts, the others still nourish. This spreads out risk and smooths returns, sparing you from the nerve-wracking drama of picking the few that survive. Malkiel exposes how sneaky fees eat deep into your gains year after year. Imagine a slow leak in your water tank. You may not notice immediately, but over decades, it drains your wealth. Index funds keep fees razor-thin, letting your money grow mostly untouched by middlemen's cuts. Markets evolve, and so does Malkiel's wisdom, now including clever hacks for taxes and AI-driven investing. Malkiel introduces tax loss harvesting, a savvy trick where you sell investments at a loss to offset taxes on gains. It's like trimming dead leaves to help your wealth grow healthier. Investors using this can legally dodge IRS bites and keep more profits accumulating over time. When Bitcoin soared to insane heights, Malkiel didn't jump on the bandwagon. He warns of bubbles, times when prices detach wildly from real value. Buying into hype can turn riches into regrets, like chasing a mirage in a desert of fear and greed. Enter robo-advisors, the digital whizzes that manage your portfolio algorithmically. Malkiel praises these for low costs and emotion-free decisions, leveling the field for average investors. It's like having a seasoned pilot flying your investment plane while you relax back in your seat. Remember that frantic Wall Street cafe? The noisy chaos hides a simple truth: you can't predict the market's next move. But armed with Malkiel's vintage wisdom and modern tools, you can invest smarter, own the market broadly, minimize fees, and dodge tax traps. Next time you hear the market scream, remind yourself, sometimes the best step is to stay the course. Try this: check your portfolio fees today. They might be quietly slashing your future wealth. Subscribe for more book summaries like this one.